Hello traders, welcome to the weekly outlook and setups volume 216. Iliya here, and you know what we're going to be doing in this video, having a look at the markets, and pretty much we're also going to have a look at the monthly time frame because October has closed, so it's good to just have a brief look at how the monthly candle closes and just to once again remind ourselves of what is happening on the monthly time frame, which is pretty much one of the biggest macro time frames. But again, as an intraday trader, somebody who trades like all the way down to the 1 minute on the 15-minute time frame and trying to catch intraday moves, the monthly time frame does not really help as much, right? Because what is going to help you quite a lot is pretty much the hourly time frame to determine the current sentiment of the market, and then of course working on your middle time frames like the 15-minute, the 30-minute, and then of course dropping on the lower time frames to catch an entry. Okay, so we're gonna have a brief look just to quickly describe them. And then, of course, we're going to go as usual. As you know, every single new month, I pick a giveaway winner who is going to win full access to everything that I offer. The Fanatic Way program, the Fanatic Flicks, access to the community, and everything amazing that we have inside. And for this month, it is going to be Mr. Eddie Mario, who has been leaving meaningful comments on every single video. He has gotten the hard batch. So thank you so much, Eddie, for the consistent support. And this is my way of giving back to you. So looking forward to hearing from you. And as for the others, keep commenting, keep sharing the value, keep sharing the videos. And of course, you can definitely get the chance to get inside the Fanatic team, which we recently did an amazing update to. And we are yet about to start crushing the markets because November is gonna be great, as we're going to explore in this weekly outlook. So without further ado, make sure you're subscribed, turn on the notification bell in order not to miss the future videos, and let's get into it. Alright, very important to start up with the current fundamental situation because this week, the week that passed, was extremely volatile. And I told you in the previous weekly outlook and setups, you do not want to trade during that week. And this is pretty much what I did. I just took a full break this week. I traveled to my grandma. She had a birthday. I stayed there. We had some amazing time and I didn't think about the charts at all. And I'm pretty happy I did this because this week was pretty volatile, also very choppy at the beginning of the week. We had interest rates, we have so many news, and the highlight of last week was that the US interest rates are kept the same, so they're frozen, which of course means a lot of things, right? The expectation was to potentially hike them a little bit, but again, US economy doing good, labor market doing good, and Mr. Powell said, well, there is currently no need to hike them, right? So they are kept the same. And when interest rates are kept the same, well, that is pretty much bearish for that currency. So what I expect right now in terms of a fundamental perspective is for the dollar to start making a drop lower, which of course is going to be a very big monthly and weekly pullback. And it's the perfect time to do so because they have all the pairs pretty much chopped around in October. So October was a very hard month. I'm finishing a little bit above break even on my Forex account and indices. I'm having a loss. This is pretty much the first full month that I've traded indices and I got a very big hit, right? Well, definitely not a very big hit, but pretty much like for starters, it felt bad. But of course, I'm going to pick myself up, go back, explore all the losses and see what I can be doing better. Now, why I believe next week and pretty much going forward is going to be better is because we have all of those news out of the way right now. We don't have NFP, we don't have interest rate decisions for the main economies, which is of course we had Bank of England last week, we had the Fed, and I do think the Euro interest rate is also over. And you can see next week we just have the Aussie, which is pretty good, and then we have of course a speech from Mr. Powell, we have a speech from Bailey, some news here and there, GDP for the pound. But nothing very huge, which is what makes me think is that we're finally could be getting some clear price action. So let's jump into the market and see what we could be doing. So as you can see, this is November. And November in the first week of November, and in fact, it's not even a week, it's just like 2 days. Because I think the 1st of November was, Wednesday, right? So just for 3 days, you can see last week, we moved this little, so 200 pips. And this week for just 2 days, we moved even more than what we moved for a whole month. So do you see what is happening right there? Now, in terms of the market structure, the monthly time frame is definitely bullish, all right? And we can definitely take something like this. The market did pull back below the 50%. And then of course the whole year, you can see the whole year has been chopping out, right? You can see before we had a very nice uptrend right there, we had a nice downtrend right there, but then since the beginning of this year, we pretty much chopped around. We made a little bit of a move up, but again, this move up didn't cause anything, right? It just broke internal structure right there. Okay, fine. But then according to me, like this low could be weak technically, so that could be where we're going next, coming in from filling in this monthly imbalance there almost fully. We almost came to the 50% right now. We're looking like we're going to be forming that evening star formation. We do have a little bit of an imbalance right there that is already kind of getting filled. Yes. So again, the question is, how far are we going to be traveling to the downside? And of course, probably the weekly time frame could give us an answer to this, because again, yeah, the monthly time frame did not really shift, but the weekly time frame did. And this here is the last weekly trend change. Well, that is pretty much when we shifted from bearish to bullish, right? And right now, the weekly range looks like this. And this is pretty much what is going to give us the biggest clue where the market could potentially go, is towards the 50% of the weekly, right? And you can see like above the 50%, there is absolutely no imbalance. The market was just slowly making its way up, which means that right now the move down could be very expansive. There is no imbalance, so the market is going to be hunting lows. Prominent low that I see is here, although this is like not an opposite candle, but it looks like we had a great pullback right there. And there is literally no imbalance. The only one that I see is all the way down there. So are we going to go all the way down there? Again, we don't know. But again, in terms of the weekly candle, you can see this weekly candle moved more than what we moved during the last month. You can see like this is where the month started on Monday, October, right? And this is what we did pretty much. Again, 200 pips, right? And then just this week, we moved 220 pips. So that is very good. Now, dropping onto the daily time frame, you can again see the confusion right there. But still, we had this daily break of structure lower, which is a trend change. That was our daily supply zone. But then here we had a little bit of a break lower, and then we had like a trend change higher. Then we have a structure break higher right there. And then we have a trend change lower right here, which makes this our current daily lower high. And right now the daily is in a very nice push phase. We took out this low, and again guys, as we trend change to the downside, all the old lows are going to become liquidity. So there is liquidity 1, liquidity 2, this one not really, and then of course the major one is going to be the one below the 50%. So what I would expect happening right now is for us to continue going down, taking all those liquidity points, and again, as soon as we take one liquidity point, we can initiate a pullback. Then we take another one, initiate a pullback again. So right now we're in this push phase. So we can, of course, immediately start expecting a pullback. But if you have been following my videos, you know that what I'm going to say is that on the first trend change, on the first push, don't expect big pullbacks. Don't expect like a 50% pullback. Don't expect a pullback all the way up to the supply zone or stuff like this. I would just be looking for a brief pullback, and then to just continue flowing with the bearish market. Again, we have like a very big imbalance right there, but what I would love to see is a pullback somewhere towards here, like 20 to 30 to 40% pullback, and then potentially to continue dropping towards the liquidity target. So that is currently our 4-hourly range, and of course you can say that this is our daily range. So again, I wouldn't really expect for the daily to pull back that high, but I would expect maybe the 4-hourly time frame to try to tap the 50% and then to maybe go. All right. So that is my expectation on the Dixie right now. Of course, it could start the week by pushing down. And if it starts the week by pushing down, taking liquidity, then of course, in terms of your macro bias, you can start looking for that pullback, right? And then to potentially go down. But of course, we're going to see that as the week starts. Again, my preferred outcome will be a bullish pullback, lower high formation, and then to just short it with confidence, because after all of that mess across all the pairs, we're finally exiting that consolidation. Right, so I'm finalizing that consolidation. I'm very excited because we could be getting some good trades right now. I just hope the market doesn't return back and start chopping again, but that is less likely because we have some development right now. We're having clear sentiment from the Fed. So let's see. So bearish bias on the Dixie. Let's see if everything else is supporting that bias. Let's have a look at Euro USD. So as I told you, once again, the monthly time frame, personally to me, it does not give me a lot of value. Because here we can look at it at many different ways. You can say that this is a break of structure, then break of structure up, then break of structure up here, then a trend change down. So currently the monthly could be bearish, trading from this zone, right, from this high to this low, and right now we're in a pullback mode. But you can also say that this is your high and this is your low, and we pull back below 50%, right? And we're still bearish. So again, the monthly time frame is bearish, but I guess we're going to be taking some longs right now. So we can see the weekly time frame, very nice push down overall. And then of course we had 4 weeks, so we had the whole October chopping at the bottom, and right now it looks like we accumulated. We took a lot of liquidity to the left, so we took out this low, we took out this low, and we all the way came in and took out that low, which is the last one, right? We swept this liquidity right there, rejected, we never closed below it, chopped around, and right now we're having a very nice bullish candle. Now the thing is, that's the weekly time frame, and of course that is the weekly 50%. And similar to the Dixie, I would expect maybe for us to get towards like this zone and towards the 50%. So right now we focus on longs. I just hope, because sometimes the market can just open right now and then print a big candle and get inside, right? And I really hope we're actually gonna be given some entries to take, right? And if you also have a look at the daily time frame, it has been leaving clues, but in a very choppy manner. Again, like we had a daily shift of structure here. Then the market pulled back and made a higher low, and then it pushed and it made a higher high. So beautiful, right? You can see we actually shifted on the daily, and we persisted with that shift. Now here, there is that break. There is that demand zone. We came in, reacted, but we failed to break higher. And then probably I have told you, well, if this low failed to break higher, well, yeah, I didn't do an analysis on Tuesday this week because I was off. But then, of course, this low didn't take out the high, so it becomes liquidity. The market comes in, took the liquidity, and then we have 2 days of very nice expansion, creating another daily break of structure. Again, looking to the left in terms of liquidity, there is the first liquidity being taken. So there's the next one, liquidity available. And this one could be the one. And then, of course, there is the one similar to the Dixie that is above the 50%. So this is eventually where we could be looking for the market to go. Now, daily time frame in a push phase, quality time frame is also going to be in a push phase. And again, after NFP, it is a little bit hard to try to forecast what could happen. But again, just to mark up the overall range, this is the last hourly break of structure. Of course, we had the trend change right there after this break of structure lower. Again, guys, you really have to go back and flow with the ranges. Don't just say, oh, this is my break of structure. No, it's not, because you're having a breakdown here, a break up here, higher high, higher low, whoop, higher high. So currently the forward range comes from this low to this high. There is once again this very big imbalance, and as I told you, when you have very big push like this, don't expect a very big pullback. Although you can see Euro USD actually shifted bullish, so it made 1, 2, 3. I would expect a fourth leg down, and then of course a fifth push up. So also bullish bias on EU. The outcome that I would love to see is for us to have a slight bit of a pullback at the beginning of the week, and then of course you can start targeting the highs. So once again, after all of that ugly consolidation right there, it looks like we're starting to exit it, and hopefully we're going to have some clearer setups, because sometimes the market just opens and it just massively pushes up. And of course at those times, it always makes me think that I need to frame some sort of a strategy based on breakout trading to really actually try to capitalize on those big moves. Because again, like this big move happened, and again, there is pretty much sometimes when the market starts moving crazily to the upside, there should be some sort of way to catch it. But again, I don't have this on my plan. Okay, so that is Euro USD, bullish bias, perfectly aligning with the Dixie. Of course, let's see how it's gonna open. Personally, waiting for a little bit of a pullback and a push up. Of course, if it starts bullish and takes even more liquidity, then of course you either decide to continue flowing with the market, or maybe starting to trade the pullback. But of course, we're going to see what happens, and I'm going to update you on Tuesday. Euro JPY, a quick look at the monthly time frame. Well, here we actually had a very nice bullish monthly candle. So it looks like the Euro Yen was pretty strong. And yeah, again, monthly time frame, well, sure, we're bullish. But what of that? Where is the value? We're bullish, we're at a higher high. So of course, I can say we can expect a pullback. But that is the monthly time frame. So again, I don't really have the confidence to say that there is going to be a monthly pullback. So I'm straight away going to the weekly. So the weekly time frame, after a very big chop right there, so that is around 2 months, 56 days, even 63, and even like 70 days of chop, we came up and we broke this weekly high. And technically right now, this is going to be our weekly higher low. And this week we also had a very nice push up. Why? Well, because again, the euro got very strong. Then, of course, I have to go to the daily first. We again see that very choppy price action. And then there is our most recent daily break. There is our most recent daily demand zone. So I'm just going to take it as a daily. And then, of course, that is our weekly. But we don't really need the weekly at that time. And then of course we drop to the forward time frame, and what we see is that the daily range is exactly the same as the forward range. So the forward range starts from here to here. The daily range starts from here, from this low to this high, but of course I'm just gonna keep the daily range. We pulled back, we filled an imbalance, and right now it's trying to make its way up towards making a new daily and a new forward break. So again, the question is how it's gonna play out. Is it going to take out the high and then initiate a pullback and then continue going higher? Or is it going to move lower to take out these lows as liquidity, tap inside the zone, and then from there give us a long trade? So there are my two scenarios on Euro Yen. That's it. Personally, I don't like when the market is just filling imbalance, right? Because an imbalance is just a magnet for price. It's not really a liquidity grab. You can see it was just empty space right there. So again, the key question right now is, are we gonna go break up from here? But if we start seeing some bearishness, then of course the market could first of all attack some of these lows, right? You can see here we have perfectly equal lows, already perfect. The low here is 0.68 and 0.72. So they're not perfect, but yeah, this one is higher. So yeah, they are actually equal. So those are two very good liquidity areas out there to take, and then you can get a high probability long trade. So let's see how that works. Euro bias is definitely bullish, so Euro Yen looks good for a long trade. But again, the question is how it's gonna play out. Well, of course, you have to navigate your middle time frames like the 15 and the 30 minute and watch out for liquidity. Aussie dollar on the monthly time frame, of course, we can look at it in numerous different ways. This could be a break of structure right there. So the market is pulling back towards demand, and right now it's reacting from this monthly demand. But you can also say, well, that is not a lower high. Like my lower high is all the way up here, and then the market is bearish. Again, this is why I don't really like the monthly time frame. But again, what we can see is we had two very slow months right there, and right now we're starting to pick up some steam. And with the current sentiments being introduced and like how the market overall looks like, a nice push and then a very long pullback, I am more on the upside. I am more towards taking longs. And right now, as we go to the weekly time frame, the weekly time frame was kind of bearish here, bullish here, bearish there, breakdown. There is currently a weekly break happening. There is a weekly trend change happening, which means that, again, if the monthly is bullish right now, the weekly aligns with it. The daily time frame is also aligning after a very choppy period right there. Wow, that is very choppy. I mean, yeah, first the daily reacted from here. That's the daily supply. Tried to push lower, failed, but then we took it out. And then as we took it out, that is the high that caused the breakdown. And then there is our daily shift of structure. You can mark this as your higher low formation right now. So that is the daily range right now, and the market is extended. It's in a push phase, taking a lot of liquidity to the left, right? So we just took out the weekly high. There is some more equals to be taken right there. So again, in a push phase, you can always expect that pullback. And of course, again, all of these old highs are gonna get taken. This one, I really like this one. It looks perfectly equals. So forward range, just to keep it very simple, because again, guys, I don't trade with the weekly and the monthly time frame in my day trading. Pretty much when I trade during the week, I don't even look at the daily. All I look at is the forward time frame and what is happening right now. So if I just actually jump on this chart with a forward time frame, broke structure right there, that is my forward range from this low to this high. The market is at a higher high, so what is very likely to happen? A pullback. All right, what happens after the pullback? Higher low and then a continuation higher. The thing is, we're very close to taking this high as liquidity. So what I could expect happen is for us to start bullish, take out the high, and then initiate a pullback. And then from there to see what is going to happen. Are we going to go long, or are we going to make a deeper pullback? Let's see. The bias is longs, but being at a high, you should always start expecting the pullback, because again, you don't want to be longing the market that high. You at least want to wait for a slight little bit of a pullback, right? Even something like this is enough. Like bearish candle, bullish candle, like 8 hours of pullback, then you can take a long, right? But longing at the higher high, not very good. So let's wait for some sort of a pullback. Then look for our middle time frames to align, and then we go long. So long bias on the Aussies, everything is looking good so far. Well, Aussie Yen, probably similar to the rest of the JPYs, it is having not that bullish of a month like the Euro Yen, but it's an overall rejection candle, and we can see already this month is starting to very nicely push up. So I suspect the most recent liquidity target in terms of the monthly are those two highs. So let's of course see whether that is gonna happen. And yeah, pretty much this AJ has been one of the shittiest pairs to be traded since June, because like since we made this high, Then it has been like 126 days, which is I don't know how many months, around I don't know, 4 months of just staying inside this very big range. Because again, the weekly time frame, I do believe that could be the the higher low to higher high. You can take it this, it doesn't really matter. The market pulled back, and then we have a very big daily range, and then we had a very big hourly range, and it's all over the place. So still, once again, on the daily, that is the daily low to daily high, and everything right there is internal on the daily time frame. And we're just about to be breaking that daily high, which I really hope it actually does very soon. Now, the 40 time frame also had some ugly big ranges, like from this high to this low, for example. Chop for quite some time, and we kind of finally came in and we broke this high right there. So there's that break of the high. And of course, if we zoom in to have a look at like what is happening right now, we did have a pullback. We did make another break of structure higher, and right now this is our demand zone. And of course, what I'm gonna say is we can expect a little bit of a pullback and then potentially to head towards that daily liquidity target and to finally exit that ugly range. Because again, this one has been extremely ugly. Like first we had this from low to high, chop 1 year, and then we have like from this high to this low, and then again chop 1 year, right? So this is just, if you're trading AJ, I don't know what you're doing here, right? So let's see, finally starting to look a little bit good, and with the current sentiment being introduced, I think it's finally time to pop up, break that daily high, and start forming new ranges. So bullish bias on this one as well. Let's have a look at the NZDs, starting from NU. Now here, what we see on the monthly time frame is that we had a very nice bearish candle last month, and this month is almost on the way of engulfing it and turning bullish. And once again, we can look at this in different ways. We can say that this is our break of structure on the monthly low to monthly high. We pull back, we filled in all the imbalance, we were very corrective to the downside, and right now it's time to move up, right? That could be potentially something we could do. But again, we can see that the last weekly break of structure is here, and the market is right now about to encounter weekly supply. But looking at how it's coming in with big steam towards it, and looking at how the market actually broke structure, like it first pushed down, then slowed down, and right now we have this very nice morning star formation. I do think we can pop up and break the high, right? We've seen other pairs already breaking that weekly high. In terms of the daily time frame, the last daily break of structure was here, and then the trend change occurs right there. So the daily time frame is shifting bullish. And then of course, yeah, you can take something like this as your major daily higher low formation. And right now we're having a supply and demand sandwich, which is again stuck between two supply and demand zones, usually between two different time frames. Like so, weekly supply, but then of course the daily demand is coming in, and the 40 time frame is also pretty bullish. The last structure break being right there, the last demand also being right there. So similar to the rest of the pairs, it is looking extremely bullish. It is at a higher high right now, very impulsive in nature. So we're also tapping inside that weekly supply. So I would, again, similar to the rest of the pairs, I would expect some sort of a pullback and then just a continuation higher. Because why would I go against that sentiment that we're having right now, right? Every single market right now is bullish, of course, apart from the USDs. So again, massive push, daily is bullish, hourly is bullish, and a higher high formation right now. So I'm going to be looking for some sort of a pullback and then to potentially continue going with that bullish sentiment. So that's all I can say about NU. We just got to wait and see, because usually after NFP, price action doesn't look very, very, very good. NZD-JPY, similar story. We had a bearish candle right there, but right now it looks like we want to pop up. We're still within an inside bar. So we can see from September's candle, October was an inside bar, and right now we can expect a breakout. What breakout is most likely? To the upside. Why? Well, because of the sentiment we're having in right now. Also, the weekly time frame, there was a weekly time frame break of structure. There was the weekly time frame, like the overall demand zone right there. The market tapped in, and right now we're just massively expanding into the highs. And yeah, you can see the daily time frame has been very nicely bullish since it tapped inside demand zone. We accumulated for a little while. We took out this low as liquidity right there, which was a weak low. Why? Well, because this low failed to cause a break. So the market pulled back, took it as liquidity, aligned bullish on the daily, and right now we're having a daily higher high, and most likely the 4-hourly supply is sitting in somewhere within here. No, it's actually higher. There it is. So that is the 4-hourly demand. I meant, if I just can do it like that, There is a follow demand zone, there is a follow break of structure. So again, guys, similar to usually the pairs I analyze, they look the same. So again, I just keep covering them, but it's the same. Higher high, daily higher high, follow higher high. Again, I will be looking for sort of a pullback and a continuation. And if of course something else happens, I have no way of knowing what is going to happen. So of course, what I'm just going to be doing is waiting, seeing, and adapting. Okay, so that's it. NJ bullish, NU bullish, all the pairs are bullish. Let's wait for that pullback and then to potentially go with the flow. USD came very close to this high right there, but it did not take it. It just stopped right there, closed last month, and this month it is kind of starting a little bit of a pullback. So is it not going to take it? Of course, we never know, but it's coming in very, very, very close. And again, this, you can see the past 4 weeks overall, we just chopped around. We were having like some very big ranges, some manipulation also from Bank of Japan. They're like doing some stuff right there that throws very big wicks. So again, trading UJ right now, not the best pair. This week, massive wick up, rejection down, closing overall was an indecision with a bearish body. So again, is it time to start a pullback? Well, probably, because if the DXY starts it, then most likely UJ will follow. This also looks like a manipulation, a massive breakup, and then whoop, massively breaking lower. So again, what we have to wait for right now in order to say that this market is shifting bearish is definitely for this daily break. So right now it's tapping inside this daily demand zone, so it could give a reaction. But then if it rolls down, and actually if this market shifts bearish, then of course we're gonna have a lot of targets like this low, all the lows to the left are going to become liquidity. But this is what we're gonna see if for real the DXY is going to start dropping, and if the dollar is actually gonna get weaker, which is what I would expect in terms of the fundamentals. So currently the forward range is the same as the daily range. Usually this is what happens on UJ. Like we just have very big ranges and the market chops inside them. Like you can see wick here, wicks right there. It's wicking everywhere, right? So currently I don't think this is the best pair to be traded, simply because we're very high on the weekly time frame and we see the overall sentiment of the rest of the pairs is starting to shift. And this one is still bullish, right? So I wouldn't really like to take a long from here. What I would love to see is a daily break of structure, pullback, and then potentially to start rushing towards the liquidity targets to the downside if for real the DXY is going to get bearish. So that is my UJ. I'm not really looking to trade this pair at all. So again, use this information wisely. Here we are on the GBPs, starting with GU. So after a very choppy month, right now, once again, we're moving more pips than what we moved for a whole month. So again, with the shift of sentiment, is it time that we start reversing higher? Let's see. Once again, the monthly time frame, you can interpret it in different ways. You can say, well, that is my high to the low, so we're bearish. We pull back above the 50%. The market tried to break down, but it failed, and right now it's pulling back. And maybe it's gonna pull back and then continue dropping lower. Again, we don't know, and I don't care, honestly, what is gonna happen in the next 5 months. All I care about is what is gonna happen next week. So this, after, once again, 5 weeks of choppiness right there, we're having a very nice bullish candle, and once again the weekly range is that. So on the short term, I would expect for the market to drive us towards 50% of the weekly range. So once again, giving that bullish bias. And then of course you can see on the daily time frame, like we chopped up very badly, but we never shifted daily to bearish. Like that is the daily break of structure right there, the daily trend change. That was demand zone. The market tapped once, 2 times, 3 times, 4 times right there, and it just chopped since the middle of the month. And we're finally exiting this range, and we're causing a break of structure to the daily, on the daily, right? So that makes this our daily higher low formation, and the 40 time frame is most likely looking like the rest. Yeah, it has this very tight range that it formed right there, and pretty much this whole move happened after NFP. Again, we had the interest rates of the Fed that didn't really result in much of a move, but then I guess the market was waiting for NFP. And usually NFP is like a wick down and a wick up, but this week's NFP, it just massively rolled up. Why? Well, because again, the market was just waiting for those news. It was waiting for the Fed, it was waiting for Bank of England interest rates and press conference, it was waiting for NFP also to see how the US is doing, and right now the market is starting to move. So once again, when the market is at a higher high and when price is at a higher high, well, of course, we cannot do much because we have to be waiting for some sort of a pullback. And what I'm just going to say once again is, again, don't wait for a big pullback like this. just wait for a small pullback, and if the lower time frames start aligning, then of course you can try to go long from here. The market took liquidity, and of course right now you can start looking to the left, and like there is, for example, a supply zone. Usually when there is a supply zone, the market is first going to react from it, and then it's gonna break it. Okay, but then if that is an unmitigated supply zone, which means that it hasn't been retested and like absorbed the orders that came in from this supply zone, for example, the market is usually going to react, but then of course it's gonna overall go with the bias. So the bias is bullish, so I would expect a reaction from this zone, take a long trade, and then of course target the upside. So absolutely long bias on GU. Let's hope we actually get some clean trades, because it's been a very big mess and I am really hungry for some clear textbook setups. GJ on the monthly time frame, well, what can I say once again? It's at a high and it has been how many? 4 months of chopping at the top. So again, monthly time frame, I don't know what, but I don't resonate with the monthly time frame at all. Now, weekly time frame, we caused the break of structure, the market pullback, retested demand zone, and right now it looks like it wants to roll up. The next weekly liquidity target is here, which is simply the high. Dropping into the daily time frame, we had this daily shift up here. But then we had a little bit of a shift down here, but then we had a shift up, then a shift down. So again, choppy story. The last break is here, daily break. And in fact, we can say that this one is also another daily break, and that is our daily demand zone. It looks like the 40 time frame is going to be similar. Yes. So there is the last daily break and the last 40 break. So again, guys, this is what I mean by don't expect a big pullback. Because here, if you drew your PD range from here to here, you drew imbalance and you take your zone from there and you expect the market to do that, well, don't. Because when the market is massively impulsing, it just doesn't make sense for it to move up like 360 pips. And then for it to move down another 260 pips just to retest the zone, right? Usually it's going to move half. So there it is, moving half and then continues going higher. So right now, again, what I would expect, similar to the rest of the pairs, pullback and continuation higher. And then, of course, you can immediately look to the left, right? So liquidity is being taken, what is left? Well, of course, this zone is retested. And like we have a zone here that the market could be tapping in. But again, that eventually is going to become liquidity. So there is the most recent liquidity target right there. But first, wait for a pullback, catch it from a higher low formation. And then, of course, you can ride it on the way up. So GJ also looks good, bullish bias. Let's see how we can get in. Let's have a look at gold, which has a very interesting monthly closure. This time we're having a very nice engulfing candle that actually engulfed almost 3 months of price action. So there is month 1, 2, and 3. And like only the last one was not engulfed with a body. So that is a very strong bullish signal. And once again, we know there are the all-time highs that failed to get broken on 2 attempts right there. So is it time we finally start breaking them? Well, let's see. Again, that depends on the war. That depends on how the economy is going to go going forward. I heard some rumors that like there is going to be potentially a digital currency. But of course, like, so for example, you know, cash is no longer being accepted, but a new digital currency is going to get rolled down. But of course, that digital currency has to be pegged to a digital asset. And yeah, there are some rumors. I'm still trying to like figure out the overall agenda of things and why could gold potentially go up, because there are some rumors about it. But currently, of course, the main highlight for that is the war. So is the war intentional to push the market up? Again, those are my own kind of conspiracy theories. I'm not going to talk about that publicly. But currently, again, just to focus on the price, weekly time frame, super bullish. We formed a weekly trend change to the upside. The market is very high right now. So, of course, we can start expecting some sort of a pullback. But as I told you, after a massive push up, don't expect big pullbacks. You can just expect 1 week of a pullback, which is happening already. And then the next week can just continue rolling up. Now, as the DXY starts to fall, right, you can see, again, I told you many times, massive push up on gold, but DXY was not pushing down, right? It didn't make sense, but right now they're starting to catch up. So right now I can expect the DXY to move as fast as gold moved to the upside, right? So let's see how that is going to play out. Daily time frame on gold, you can see that we're still, I think last week didn't do much on gold because it already massively moved up. It kind of went ahead of the expectations. And again, right now, as the dollar starts to move, gold could slow down because again, you can see Monday pulled back, tapped inside demand zone, tries to push. So are we going to be making a new high right there? Well, of course, let's see. But yeah, that is the daily structure, and then the 40 time frame is probably gonna be a little bit choppy. Yeah, so again, gold has its periods. This is why I don't really like trading gold, because like sometimes it just moves very nicely, flushes like crazy, then pumps like crazy. There are beautiful situations on gold. Then it gets choppy, and then on the why I don't trade gold is because the intraday are super manipulative. Like zones are not being respected, so it works like best with like liquidity grab setups and then going against that. I personally mostly resonate with trading structure. So if I trade an instrument, then structure has to be respected, right? And on gold, that is not always the case. So currently there is the Fowley, so that is the Fowley, not 3 hours, Fowley demand zone. We're bullish on the daily, we're bullish on the Fowley time frame. The daily time frame tapped and we collected a lot of liquidity. So there is like a liquidity being grabbed right there, and then we aligned bullish. So again, I would say longs targeting the daily high. So I'm just gonna call the long setups right there. Just keep in mind on the weekly we are a little bit high, and we're starting to like compress a little bit on the top, but of course that could mean we're accumulating for another move higher. So again, just because we are very high, don't immediately start looking to sell. Okay, just keep following the flow. Daily is bullish, fall is bullish, everything is bullish. So I'm gonna be personally, if I was trading gold, I would personally be looking for longs from this zone. So let me know, gold guys, what are you looking for on gold? Do you think we're gonna be reaching all-time highs? Let me know. All right, let's have a look at some indices starting from US 30, which has been a mess in the last month. But again, looking in the monthly time frame, so you can look at it once again in many different ways. You can say that there is a break of structure lower and lower, and then we have a trend change higher, and then we have another monthly break of structure, and then you can say that this is your monthly demand zone. So we tapped inside monthly demand zone, taking liquidity within that monthly demand zone, right? Because this to me is not the valid high or low. And right now it looks like we want to roll up. But again, this is not just about price, it's about how the economy is doing, and more importantly, how those 30 companies within the index are doing. But again, the highlights pretty much for all the indices is that like the SPX, the S&P 500 is driven mainly by like the big 7 companies, which take a very huge percentage. Like, so imagine we have 7 companies out of 500 companies that are like accounting for 25% of the move. So that is very, very, very huge weight that those 7 companies have. So right now, like we had earning reports, the earning season is over, interest rates are out, and everything is out, and you can immediately see, whoop, we started pumping. So weekly time frame, very nice push, and it's coming in very close to be making a weekly bullish alignment as well. I think it actually did it with a very little wick. So then dropping onto the daily time frame, well, again, we had a very nice push down, but the daily time frame aligned bullish right there. And this week, it has been extremely bullish. Extremely bullish, but once again, a little bit hard to catch because the market just goes and it doesn't give setups, or it's gonna chop you around on the lower time frames. Like you can see here, Monday chopped around, then it pushed up, no pullback, then it pushed up, no pullback, and then it pushed up again. So currently, it is very hard because according to me, that here is the last valid forward break structure, and that is a demand zone that I wouldn't really look to trade from, and that is the daily time frame. And right now we're very high and we're taking that weekly liquidity. So similar to the rest of the pairs, I would look for some sort of a pullback and then a continuation, but at that time I want to see some cleaner trending markets. Like, I don't know, just cleanly make higher lows and higher highs, and just to get a little bit cleaner with a clean pullback, with a clean push, not just like a V shape like that, because that doesn't tell me much. Right now it was downtrend, right now it's in a massive uptrend just for 1 week, and you can of course see this in price. Like on the monthly time frame, we had a very bearish candle, and right now just for 1 week we're already all the way up. So let's see. I don't want to call anything right now on the indices. I told myself I'm just gonna wait because I had like pretty much my losses came from trading like within this period right there, and then trading within this period, because when the market impulse right there weren't really any setups. Then you just get wrecked in price action like this in the choppy periods, right? Which is, again, I learned my lesson this month, is that again you have to know when to trade and when not to trade, and when the market is not looking clean, you just don't trade, right? Because again, you show up every single day, but again, you take losses every single day. So why would you show up when the market is shit, right? So again, it's all about that balance between showing up and also like knowing when to step aside. So right now, I really don't know what's gonna happen. We can have a deep pullback, we can have a very brief pullback and continue going higher. We can initiate like another continuation. I don't know. And again, it's very tricky to say right now after this massive expansive leg. So again, I would personally wait a little bit more. Again, there is no more waiting because NFP is over, everything is over. So right now it's actually the time to trade. But currently I just don't have a setup. I don't have a clear positioning of price. So I'm going to be waiting for something more. So let's wait for Monday, Tuesday, see how they open, see what price does. And then of course we're going to adapt. Having a look at NASDAQ as well. On the monthly time frame, again, you can look at it in different ways, but there is a monthly break structure right there. The market pushed, it pulled back for 3 months, and right now it looks like it wants to start a pop to the upside. And again, keeping in mind that tech companies, they suffered a lot, which is what made this pullback right there. Like you can see, like for example, COVID didn't do anything, but then we had that a lot of tech stocks started dropping, and we have this very beautiful 38% drop. Then the market immediately recovered 53% from the bottom, and right now we had a little bit of a pullback, which from the top to the bottom is around 10%, which is pretty much like a healthy pullback for the tech stocks. And right now it looks like we want to rally to the upside once again. So dropping onto the weekly time frame. Well, the weekly time frame, it did this like A, B, C, but we actually had a 5-wave, 1, 2, 3, 4, 5 waves to the downside. And right now we're going to be encountering that weekly supply because on the weekly time frame we're still bearish. But then it dropped to the daily time frame, and the daily time frame is going to be bullish. So we're going to have this supply and demand sandwich, as I like to call it. So let's see. I would expect some sort of a reaction from this weekly supply, but I would expect the index to overall shift bullish just based on what is happening. The hourly demand zone here is closer to the current price because on US 30 it was all the way like down there. This one looks very strong right there, but Nasdaq is very close right here. So what I'm going to be looking for is for a pullback in a long trade. Right now the market is going to be collecting a lot of these flat highs right there. So this is all flat highs, and of course you can take it like that, but you can take it every single high. So there is last taken, there is a high right there, there is a high right here and here and here, right? So all these highs are going to become liquidity at some point in time. But right now, again, in terms of the positioning, it's at a higher high, so I'm going to be looking for some sort of a pullback. The market could first of all take some liquidity and then initiate a pullback. So of course, guys, you have to flow with the markets because currently at a higher high, usually there is nothing we can do. Either, of course, we can look for a pullback trade, which is risky because when the market is very impulsive, you don't want to really go hard on pullback trades. So wait for the market to pull you back, higher low, and then potential longs. Well, just as any other index, we're had a little bit of a pullback, and right now the monthly time frame is already printing a very nice bullish candle. So dropping onto the weekly time frame, similar to Nasdaq, SPX is about to break potentially the last weekly supply. It's coming in very strong inside. And again, guys, remember I told you for quite a couple of times right now, I called this 4140 level. Again, that is my buying area. So I literally bought. I just bought the index because this is like my biggest holding in terms of investments. I hold a lot of SPX index, and I literally took it from down there as an index. Again, this is not a long on MT4, but very beautiful reaction. And I didn't buy a lot because again, I was expecting a little bit more of a drop. Like this is just a 10% drop, but again, as I told you, 10% is a very healthy pullback where you should be definitely looking to buy some. Okay. And like my main question is right now, again, there are a lot of rumors that it's going to be getting worse and worse, and with debt levels worsening. And also there was a survey that CEOs of companies, of those big companies, are actually expecting for the market to crash. Let's see. It could take a year until the market drops. So again, we're just going to be very careful navigating these markets. But again, you can see 5 consecutive days extremely bullish. Extremely bullish, and again, it's that bullish that it doesn't even allow you to take a trade. Like the 40 time frame shifted here, chopped for a little bit, massive push, massive push, massive push. Right, so the last 40 breaker structure is here, the last 40 demand is right there. Right now we're taking liquidity within that weekly supply zone, but what I would just expect to happen is first to pull back and then just to break it and take the liquidity above, and then maybe we can expect a bigger pullback and a continuation higher. So that is what I would expect in SPX. There is nothing I can say right now as we're trading in that high because it's exactly the same as the other indices. And again, you can see the timeline. So we went at extreme fear, like on the beginning of October. We recovered a little bit, and right now it looks like we're coming back to the equilibrium. And right, you can see once again, the market very nicely dipped below the 125-day moving average. I personally use the 200. It's slightly bit better. And right now we're coming back again to the mean value, right? Because the market again oscillates between mean value, goes up, goes down, goes up, goes down. But again, everything being at extreme fear, I would expect for us to definitely pop up a little bit on the SPX. And then potentially we're going to see how the economy is going to be doing and whether we're going to have a bigger crash or are we going to be going for the all-time high. So that is the current technical standpoint. High formation on all the indices. So again, we have to be looking for some sort of a pullback. Well, just to recap, once again, after all the news last week, this week should start getting some steam, and we already have the steam after NFP this Friday, and I would expect some continuation. So again, on all the pairs, follow your quality ranges and do not expect a very big pullback. So DXY at a lower low, pulling back, EU at a higher high, pulling back, and everything is either at a higher high or a lower low. Like EU higher high pulls back. Euro JPY is currently traveling towards the high, so this one is a little bit sketchy because we can first initiate a drop lower and then push higher. Aussie dollar at a higher high, wait for a pullback. AJ at a higher high, wait for a pullback. NU, NJ, everything is a higher high, and I would expect a brief pullback, not like a very huge pullback down there. UJ is too sketchy. This is a pair that I wouldn't touch at all. And you can see, like, for example, UCAT as well, like the USD pairs are starting to drop a little bit lower after being extended for a while. GU, high, expecting a pullback. Same thing with GJ. Same thing with, no, gold is slightly bit chopping around right now. But again, gold already made the massive move. So right now it's like reaccumulating either for a bigger pullback lower or for another continuation higher. So again, you just have to watch it carefully. And US 30, NASDAQ, and SPX, they're all at higher highs. It's only that US 30 took out the weekly liquidity, but like NASDAQ and SPX are still like traveling towards taking the weekly lower high. But I do think they're going to take it. So let's see how they're going to play out. Don't wait for big pullbacks and just flow with the markets and go with that current sentiment. So hopefully we're going to be having an amazing week going forward. I wish you a lovely weekend and a crushing week ahead of you. Talk to you guys on Tuesday and let me know what are your favorite pairs going forward during this week.